is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hey, Robert, how you doing, man?
Yes, and thank you for taking my call. I wanted to let you know that I've been a subscriber for a couple of years, just different members of your team, and I really enjoy it. But really the reason I'm calling is to express my sincerest gratitude for you providing that information yesterday on the small business grant. I'm a small business owner and primary breadwinner for my family, and if I can get that money, it's going to really mean a lot to my family. So
that's awesome.
Thank you for taking the time to do that.
No, well, listen, man, we appreciate you growling and prowling with us.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We kick things off with markets green across the board right now. We've pulled back from the highs, though. S&Ps, we're up by 0.8%. You're trading up 53 points. We had an inflation data point this morning. Markets were already in the green by about 30 points when we came into that inflation data point. You accelerated higher from there. Where do we come back? You test that area, and we've popped a bit. As you have the S&Ps right now up by 52 points, trading at 68.31. NASDAQ 100 up by 367 points. You see the acceleration on the inflation data this morning from about 25,100. We're trading up 1.5%. Growth stocks higher. How about Micron? Up by 12% on their numbers. You jump over to NVIDIA shares. Up by a solid 2% right now. Amazon up by 2.25%. Microsoft shares 1.75%, and they're $5 off of the highs. You jump over to Google, up by 1.9%. Meta shares 2.2%. Oracle was higher, up by 0.7%. Dow lagging a bit, only up by about 100 points. That's 0.2%. The Dow is up about 48,700 this morning. You talk about a run. That was 500 points. That was a 1% decline from 11:30 until about 12:30 when we got some selling in this market. Now, let's jump over to the inflation data. Excuse me, because right now we have the 10-year yield pushing 4.12%. Take a look at the dollar before we jump over. Your dollar spikes to 98.20 this morning. The premise being you got higher price, lower yield. The Fed has the ability to cut. They're not as worried about inflation. Then we recoil a bit. Now, getting into this data, we live in interesting times, as they say, and we sure do, folks. So we do not get the October data, and we get the November data. But remember, the government was shut down until about November 12th, okay? Now, a bunch of articles reference it. We'll talk about it in one of the Bloomberg articles coming up as well. But where they had no data, they assumed 0% inflation. Now, there is political creep in these numbers, and hopefully this is a one-off that they're not going to be able to make these types of assumptions because it's a gross assumption on the side of a downward bias. And what this bias is, okay, is that you have many areas of the CPI. So the headline number for CPI, okay, comes in at 2.7%. Core CPI comes in that we're looking for, which was 3.1 for the headline and 3% for the core. Great numbers, okay? Now, this data was delayed. It was a jobs Tuesday. This time, it was a CPI overall. Owner's equivalent rent. Okay, this is what's getting focused in on. Now, owner's equivalent rent doesn't get used to calculate. If that's the only thing being a problem, but it's a problem, okay? And that's been one of the persistent parts. Put in zero inflation in multiple categories while calculating the OER, the owner's equivalent rent, for approximately 1/3 of the cities used. To the extent that it introduces a downward bias, the Fed would be mindful of the risk of taking the data on housing services inflation at face value. This weakness should be reversed with very large owner's equivalent rent and tenant rent increases in the April CPI released in May. But until then, the price levels for owner's equivalent rent and tenant's rent will be biased downward. Now, I'm not sure why they pushed that out until May, okay, or how that calculation gets in there. But this is just CNBC talking about it. And yeah, the government was out for half a month, so hopefully that's the only time it happens. But it seems like they're light on data, and when they're light on data, they're putting out a full November number, and they're just leaving the numbers at 0% for some of those components that they weren't able to get a reputable number. Now, the other part of this that they talk about is the fact that we had Black Friday sales. Okay, now normally they account for this. Officials were not able to collect prices in the field for the shutdown that lasted until November 12th. Black Friday sales, okay, the BLS uses a seasonal adjustment to correct for that trend. But the problem is that how do you correct for it when the government was shut down for like 6 weeks leading up to it? The seasonal adjustment is designed for a normal November when workers spend weeks collecting prices before those sales begin, and they can factor that in and make an adjustment. How are you going to make an adjustment when you have no data? But then we're jumping to the Journal, okay? The Journal makes the same case. They talk about Black Friday, and then they say an even bigger issue is that missing October data likely made November housing cost increases look milder than they actually are. Unfortunate that you gotta, if you're making a real world assessment, the number's probably greater than 0, or it's explained within, but it's just left at 0. It brings down the headline numbers. It helps explain the possible beat. But unfortunately, we're left with the fact that it may not reflect the actuality of the data going on when they just push a 0 over where they have no data because the government was shut down. So the market taking it in stride. Fed's still going to be worried about the economy, but it may give them some pause to look at that inflation data and trust the owner's equivalent rent when there's a 0 getting pushed across columns from a lack of data in many cities. Economists believe the missing data led the BLS's formula to assume that housing prices did not increase at all in October. A 0 pushed down estimated rent levels in November as well. Well, if that's the case, that's great. But no data does not mean a 0% data. The market, quite the sell-off intraday, but not in growth stocks. We jump around to the heat map for the NASDAQ 100. How about that chart, man? Look at Micron. We'll jump into Micron. Boy, their quarter, we'll talk about it coming up next segment. Micron's quarter coming up. Whew, talk about blowing it away. And Tesla pushing the highs yet again. Everything. Look at Lam Research up by 7%. Clack up by 4.5%. Marvel up by 3.3%. Palantir up another 5% as well. You jump over to the Dow. And yeah, consumer staples, not so much. Walmart off by 0.7%. Home Depot off by 0.5%. Procter & Gamble 1.4%. United Health off by 1.2%. Apple in the red as well. All right, folks, stay tuned. We'll come back. We'll talk some Micron earnings. Micron pushing highs up by 12%. We'll come right back, folks.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We got markets in the green, inflation data out, but owner's equivalent rent lacking, bringing down those numbers. Micron, how about it, man? Micron, we hit 263.65 this morning, just off of the all-time highs made on December 10th. We got up to 263.65. Now you check out Micron. AI memory and demand, and you better believe it. Now they beat in the current quarter, okay? Here we go. So they beat in the current quarter, 478 versus 395 on revenue of 13.6 billion versus 12.8. But how about this current quarter? 18.7 billion versus 14.2, and they're going to make 842 versus 478. Ooh. You better believe the banks are upping their targets on this equity when you come like that. If AI keeps growing as we expect, we believe the next 12 months are going to have broader coattails to the AI trade than just the processor names, and memory would be the biggest beneficiary. Those are analysts talking about that equity, and you have NVIDIA higher on that news as well. And yeah, how about it, man? Up by 12%. NVIDIA shares up by 2.2% right now. NVIDIA been under pressure. Today, a little bit of a lift. Oracle shares, yeah, no real reprieve. In the green by $1. When you think about how high this market is right now, not really a reprieve. Meta shares up by 2.3% right now. We jump over to Tesla. He's talking about on the morning program today. Yeah, didn't quite have the volume, right? You accelerate on Monday and Tuesday with volume. You pull back, technically lighter volume. They're all 3 big days. It's going to be a big volume week for Tesla. All right, look at this volume. We've already exceeded the volume we did last week, the prior week. That's a holiday week, November 24th. It's only Thursday. We got a full Friday left, and we've already done over 400 million shares in Tesla. It's going to be a big volume week. That's how you want to break away. You're breaking away. Hey, check out these highs it's coming into. So look at this. You might do it, man. If you get a big day tomorrow, which we could get, you could actually break above these highs on volume, which is 645 million shares. Now, that would take a big final hour. That would take some big volume tomorrow. But you could do it. That's options expiration Friday. 3rd Friday of the month, options expiration. Oof. Boy, that would be something. You ever break above this B point with volume? Watch out, Tesla to the upside. Remarkable. Up by 4.2% right now. GM up by 1.3%. Ford flat this afternoon. Jump to some of the banks. JP Morgan, slightly in the red. Let's check out those retail stocks that are pulling back. Excuse me. Yeah, Walmart, we started out in the red as everything else was in the green, but a little bit of a rotation. When they go risk on, when this market goes risk on, Walmart is one of the stocks that suffers. I mean, they're a safety stock right now. When the market goes risk off, Walmart is one of the areas they go to, but not today. Check out some of the volume on Walmart. Yeah, look at the strength as it's been trading higher. Let me take off some of these. That was their earnings. Breaking above where we were in February. It's decent volume the last couple weeks. All right, we talk about the Fed. So Christopher Waller, Michelle Bowman, Kevin Warsh, Kevin Hassett. We're going to find out in a few weeks. Trump said he was interviewing 3 or 4 candidates for the Federal Reserve chair, expected to have a decision pretty quickly on who he would nominate to replace Powell. I think every one of them would be a good choice over the next couple weeks. Trump said he wasn't sure if he would announce the pick before the end of the year, but it will come over the next couple weeks. It's coming in 2 weeks, folks. It's the best phrase out there, right? Coming in 2 weeks. Just like things. Now it's not 2 weeks, it's the beginning of next year, which is in 2 weeks. Says he has a pretty good idea who he's going to nominate. Asked about Fed Governor Waller. He said they had met again on Wednesday and praised him as great. I mean, he's been a man who's been there a long time. Not exactly a ringing endorsement. He praised him as great, but I mean, he's been a man who's been there a long time. Well, that is a fact. I think the 2 Kevins are great. I think there are a couple other people that are great. Called for aggressively lowering rates. They should be 1% and maybe lower than that. And when they go to 1, we're going to be calling for negative rates. And when we go negative, we're going to call for even more negative rates. Nonetheless, we await that one. And they're going to run it hot. Hey. You know, no matter what, the inflation number was supposed to be 3 to 3.1%. And the Fed's a lot more worried about the job front right now, and they probably should be from some of these numbers are coming out. You know, they're looking, I got to update that one. They're looking for, you know, employment's rising, only adding 22,000 jobs a month right now. That's where their focus is. Jump over the dollar. Dollar catches a bid last couple days, but the pressure has been negative. Dollar's had a series of lower lows, lower highs. We're trading right now at 98.44. We bounced from that 98 area. As you have gold hitting all-time highs of 44.09 today. We back off a bit. Yeah, so let's see. On a daily basis, yeah, look at this volume, man. We had all this volume. So that was 43.92. We actually hit a high of 43.98 on a little bit lighter volume bar. And then you pull back. That was quite a day. Let's check it out on a weekly. Look at that volume, man. This is going to be tough to get above this action in gold. I mean, it's not just this week of October 13th. You got the week prior. You did almost 1.7 million contracts. The week after that, you did 1.8. We're at 800,000. It's about to be the end of Thursday, right? We haven't eclipsed 1 million contracts in 4 straight weeks. So we're going to need some more momentum in these markets on gold. That's the weekly on gold. Now, silver has been a stronger story. You had this acceleration, same thing, October 13th, but then look how silver lines up, right? You pull back on lighter volume, 3 straight weeks, you get a sign of strength on some volume, and then the last couple weeks have accelerated with volume as well, and we're going to do it again this week. Look at this. We've already done 460,000 contracts on silver. You're coming into 613 last week. And on a daily basis, yeah, look at that breakaway yesterday on strength. Silver's strong, man. It's not stopping. We got a 1-to-1 that could take silver to 68.25. How about that? Platinum extending beyond the 1-to-1, up another $24 today for platinum. We check in on copper. Copper right now flat at $5.43. Yeah, XAU up by about 40 pennies, 338. Take a look at the HUI, up by 64 pennies as well. All right, we get the markets up by 60 points right now, trending. We got a choppy market in green territory. S&P is approaching 1% in the green. NASDAQ leading the way, back over 400 points, up by 1.6%. Dow up 0.3% right now. And you get the Russell up by 0.8%. All right, folks, stay tuned. We're coming back talking to Tim Ord. We'll talk some equities, we'll talk some markets, and we'll talk some metals. Always a good conversation. Stay tuned, folks. Come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Open Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got markets in the green right now. S&P's up about 63 points or 0.9%, trading at 68.42. And right now, folks, as we do each and every Tuesday and Thursday at 30 past the hour, we're going to talk to Tim Ord. You can check out Tim's website, folks, ord-oracle.com. You see Tim there. And don't forget, head on over to the front page of TFNN, right under the services tab. Tim's got a couple of great webinars, The Secret Science of Market Tops and How to Identify Market Tops, as well as 6 secret ratios every trader should know. And don't forget about Tiger Dollars. You can get those Tiger Dollars and apply them, add more savings even than that. Tim Ord, good afternoon.
Good afternoon. So this is a week before Christmas. Week from today is December 20. So year's coming to an end. So,
It sure is, man. We got, a little CPI data out this morning, Tim. We have markets reacting favorably, a little bit of chop. What are you seeing in this market?
All right. This is, I showed this last time, but this is the, let me get my little drawing tool out here. Make it black. All right. This is the daily SPX VIX ratio, and down here is the SPX, and we still have that divergence, even though the market's kind of got wonky here over the last couple of days. We did hit a new higher high on the SPX VIX ratio, and the ratio leads the S&Ps. So if you notice, the S&Ps made a lower high compared to the October high, but the SPY made a higher high. So at some point, at a minimum, we're going to go back up and at least test on the SPX VIX ratio, at least that high. So anyhow, in a nutshell, the VIX is bullish. It's and the SPX to VIX ratio is bullish. It has a bullish divergence, even though we pulled back here for about the last week. It's not a top of any consequence. We got a little bit of panic. We had a 10-day trend. It's not up to snuff. We're up around 106, which is not real bullish. But this is the bottom window is the ARMS and 2-day average of the ARMS index going back to this is July period back here, and shows all the times in pink. All this pink area here are times when the 2-day trend got it to 1.2 or higher, and we hit that a couple of days ago, and we fell back. But I marked all the times in the past, and all of them came near lows here. And this other pink area going sideways is where the trend reached 1.2 and higher at a price level on the SPY. So that's normally you go back into that area is use a support area. So we had a support area around 670 area, then one below that comes in, give or take, around 640. So we kind of went through it, came back down to it, but we hit it yesterday. We bounced out of it today, but the trend's showing a bullish divergence here. We do not have enough panic. This seasonality is bullish. Actually, it started being bullish, I think, on the last week, December 14th. And even though we retraced here a little bit, I think they were just trying to fool with the market. Here's another way to look at the trend. These are, I listed the days where the trend hit 1.20 or higher. And a lot of times they come near lows. We kind of blew down a little bit. But we had one here. This is Monday. That was actually a bicycle. If you get a trend of 1.2 and higher, and on the same day you get minus 200 ticks or lower, it predicts the bottom the same day as those readings to as late as 2 days later. Well, 2 days later was yesterday, and the market made a low. Now we gapped up. So I'm still thinking this vicinity in here is still a support area, and we have a lot of different ticks in that region. If you go back into that area, you can see a lot of trend readings in this vicinity. This, I don't know, 660, 670 area, 675 area. So I'm still thinking we're going to hit new highs. We got a positive VIX ratio. We got panic in the ticks and trend. We got two different methods doing two different things, kind of say the same thing. So even though we're kind of fooling around in here, I'm still bullish. I still think we'll hit new highs. And the Christmas rally is supposed to start on the 20th. It hasn't started yet. or excuse it, on the 14th. We have pulled back, but I bet we still rally through Christmas and possibly into the new year, and I think that's what's probably going to happen. So I'm still bullish, even though it's kind of back and forth. We'll hit new highs, pretty sure. And actually, this high back, I forgot what date that was, that high has not been touched yet. We came close to it on this day, but we didn't touch it. And markets don't make a spike high and come straight down. Bottoms can, but not tops. Tops sometimes are double tops, triple tops, quadruple tops. Sometimes they bang at those tops 5, 6, 7, 8 times before the market turns down. We haven't even touched the top yet. So if this is even being a top pattern here, we still haven't seen the final highs. So I don't think it's a top pattern, but I think we'll break through with a sign of strength. So anyhow, I'm bullish. I'm still staying long. And here's another one more thing. Far as the this is a sign of, we did have a panic reading. This is the 5-day average of the advanced decline on NYSE. I marked the times when you had a panic sell. That's all these areas here. This is daily SPY right here. And then you have to have a sign of strength after a panic decline. We had that coming off the low in, what was that, October, I guess it was. Or maybe, was that November? Yeah, it was November low. So we have panic, and you have a sign of strength. If you didn't have a sign of strength, that would be a problem. And we did have a sign of strength. So there's a lot of stuff. I'm in the market at a great price, but I see no reason to get out of that long position. So I'll put it that way.
I mean, that chart, I remember that chart. That's a powerful chart, man, in terms of how those line up, the bottoms and the accelerations, even the SPY on the bottom. I mean, those areas, man, boy, each one of those shaded areas, the beginning of a pretty decent uptrend. Yeah.
And sometimes, the market, this is back the 22 low back in here. We had, 4 of them. It's a little bit different than Zwag Stress Indicator. And this is a little bit easier to I guess, manipulate by your computer. It's not as complex, but it works just as well. But if you have to have a panic bottom, and after the panic bottom, you have to have a sign of strength. If you don't have a sign of strength, then you're going to look like something like a 2008 type market where it just keeps going down, and you get panic readings, but not a sign of strength. And here we have that, so it's bullish.
Pretty cool. All right, folks, we got markets in the green. We're coming back. We're going to talk some gold. We'll talk some metals, some equities with Tim. Stay tuned, folks. Tim and I are coming right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. Markets in the green right now. S&P up an even 1%. You get the NASDAQ 100 up 421 points, up 1.7%. We're talking to Tim Ward. And don't forget, folks, Tim's got a couple of great webinars under that services tab at TFNN and his website, ord-oracle.com. And where are we going to next, Tim?
You know, I showed this chart probably for the last month, probably quit showing it. But I'm trying to emphasize that I think a new leg in the gold market has started. And this is one of the charts that kind of proves that idea. Where it turns out to be true or not, we'll have to wait and see. But anyhow, it's the monthly, I'll get for some reason my drawing tool dropped off. But anyhow, this is the monthly XAU to NDX gold ratio. It shows the gold stocks against the NASDAQ stocks, and it had a change or an initiation of an uptrend or a change of character, you call it. And this is the first time the RSI of this ratio got above 70 or thereabouts, going back to 2000. So this is going back to 20, or actually, first time it done it since, well, it was back in, I guess, 2008. But anyhow, it's been multi-years since this happened. And when you have a change of character in the market, that means the market's shifting. So what it's saying is probably what's going to happen over the next several years, and it could be 12 years, is that gold stocks are going to outperform the NASDAQ stocks. So having said that, I was actually, me and your dad were in the 2000 bull market of 2000, 2012, and those gold stocks did phenomenally well. And they did phenomenally bad from 2012 to 2014. Now we're back to, or 2024. Now we're back on the plus side again. When these stocks fly, they fly. And when they don't, they don't. They're like lead balloons. But right now we're in a fly time, so it's going to get a lot better before it gets worse. So, but anyhow, this rally could last into 2036. That's a possibility. So we'll monitor as we go forward. Cool. Yeah. So it's I've got a lot of these. I've kind of been buying the real penny ones, and those things been exploding off the lows. TIG.V. I don't even actually look at the names, but I just bought it here, I think, a week or two ago, and it's already doubled. But anyhow, and they're going to rotate back down to the smaller ones, and I think that rotation is starting right now. The big ones have screamed up. They have gone probably just as far as they're going to go over the next several months. They'll probably head to a consolidation. But I wanted to point out, this is the next chart. I thought it was real interesting. This chart goes back to 2014, and the middle window is the daily silver gold ratio, and I put this chart down here is a rate of change, so it's on a 12 period, and momentum in the market's really important. And if you get momentum on your side, you stay with the momentum side. So if momentum's going up, I use the Bollinger Bands for that. Usually the weeklies work the best. But as long as the market stays above the mid-Bollinger Band, I buy the pullbacks. And vice versa, if the Bollinger Bands are heading down, and I sell the market once it gets back to the mid-Bollinger Band type thing. So momentum really works. It increases your odds of success. So you always want to go with momentum. So what I did notice here, this is the rate of change, 12 period, for the silver gold ratio. In other words, when it gets above 10, you get a pullback, then you get another surge. And this is the GDX up here. The top one was the GDX. And the first surge up was there, and the market was basically halfway done. And it rallied probably for, looks like about, I don't know, I'll say 3-4 months. Rallied another 3-4 months. Then we had another one in 2020. This kind of a COVID crash, had a ROC up above plus 10, and you had a consolidation. Then you blew higher again, looks like by another 3-4 months. You had the same thing happen in 2024, got way above 10, and market pulled back a little bit, but kept on going higher, looks like for another 6 months or better. We just had one. We actually currently have one right now. It's a plus 1130. You may consolidate here a little bit, but that's not the. If they have anything characteristics of the previous past, you may consolidate here a little bit, but it looks like you may actually still can't continue to work higher. Then the second one is where you get the top. This is the second ROC reading above 10. There's there, and it didn't really get a signal there. But the market went up for another 6 months. So I'm not really in any hurry to sell here because you got a lot of momentum pushing this market higher. And even on a short-term basis here, this is the daily, so you can have buy and sell signals on daily, and the weeklies remain on a bicycle, and the monthlies may remain on a bicycle. But anyhow, these two indicators are still basically holding. The bottom window is a cumulative advanced decline for GDX, and the next window up is the cumulative up-down volume for GDX, so it's a cumulative. And I put a Bollinger Band on it, and as long as these two indicators hold above the mid-Bollinger Band, which is all this green area, the market's in an uptrend. When it's below the Bollinger Band, the market's in the downtrend. So I didn't go back real far. It goes back a couple of years, but this is current. This is up-down volume indicator cumulative. Right now, it's not really showing any weakness. We're holding above the upper Bollinger Band. We're kind of still working higher, and so is this indicator. It's not pulling back at all. So I'm still long GDX. We're up against the previous highs of October. I said we had an upside target around 85. We're 80 on this chart. It's about 86, and I'm not seeing any weakness here. So we may continue to push higher. So I don't know. I'm still long. Momentum's key on what goes on here. So, gold stocks are doing fine. I think there's just going to be a big rotation in the market, and the leaders of the last year or so may take a rest, and the secondaries and the thirdaries may come to the forefront. So, I'm not seeing anything real bearish here. This is momentum. So. I'm not guessing where the top is. I have to let the market tell me where it is. And I don't see any, at least so far today, I'm not seeing any problems. So I'm long gold.
Gold's hitting
GDX.
All-time highs, I was going to say, Tim, right? And it's just right back up there, man, 44.09 on the futures. And it's pretty cool momentum because I agree with a ton of what you're saying. And just even in life, right? And that's what, I love that, charting, it kind of sometimes it's just, it's the emotions, right? The fear, the greed, the all of us. And yeah, momentum, man. When you're in momentum in life and the force is pushing you one way, it makes sense. I just love how it looks, and I agree, a lot of it. And yeah, hey, all-time highs today, in that gold contract, and silver just looks remarkably strong. A lot of volume in silver too. I'm not sure if the volume in silver is just remarkable. It just keeps coming, man, every single week for silver.
Yeah. Actually, December 20th, which is basically Saturday, but the seasonality is one of the most bullish periods for gold. So we're going into a seasonality period. The seasonality is not exact science. Can it be several days earlier, several days late? It can. But seasonality is the most bullish starting December 20th. So we got seasonality bullish right in front of us. So may keep pushing.
They're buying. I was going to say, if they're buying gold for Christmas, $4,400 an ounce. There you go, folks. Jeez. Tim, great stuff, man. I appreciate it. We'll talk to you one more time before Christmas. We'll talk to you on Tuesday. Have a great weekend, man.
All right. Thanks a lot. Talk to you then.
Thanks so much. Stay tuned, folks. Come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We have the S&Ps right now up by 60 points. NASDAQ 100 up a nice round 400. The Dow up 105. And yeah, taking a look at that heat map again, the Dow, consumer staples. Some of the healthcare stocks trading lower, but not in the NASDAQ 100. Look at that chart, man. Micron up by more than 10%. AppLovin, Palantir as well. Now, folks, this week only, we got the TFNN Tiger Dollar holiday sale is running. It runs through Monday. You can get a 20, 30, or 40% bonus on your purchase for you current subscribers out there, whether you're talking about the Gold Report, Mastering Probability, Basil's opening call. You can still sign up for it, gain access to that webinar he did Tuesday night. Great webinar for the outlook for 2026 and what looks good going ahead. Any of those services, you can apply Tiger Dollars. You apply them once, they're used automatically. So if you're on a monthly subscription, you don't have to worry about forgetting. It hits your credit card, applied automatically. You spend $500, you get 600 Tiger dollars, 100 free Tiger dollars, a 20% bonus. Excuse me, you spend $1,000, you get $1,300, a $300 bonus. You spend $1,500, you get $2,100, a $600 Tiger dollar bonus, or 40%. They never expire. You can transfer them if you'd like, folks, and they're good for any TFNN newsletter, service, Tim Ward's webinars we were just talking about out there. You can check those out during the holidays. You go over to the services tab. All right, Teddy Kegsat's got a couple great webinars over there as well. You want to learn about some of those ratios we just talked about, check that out on the front page of TFNN, the TFNN Holiday Tiger Dollar Sale. You get yourself a mug as well, but all those savings in Tiger Dollars. All right, and what else is going on? We talked about that tournament going on in the Bahamas, and they're down to 5 players. And those 5 players are now all guaranteed at least $2.3 million. How about that? As they're playing down for the winner of $10 million for the World Series of Poker Paradise. And they're playing that live on YouTube right now, actually, as well. You ever want to learn about poker, just watch it. Just watch it. It's amazing what you can learn just watching some of these high-level players in certain tournaments. Just like anything else, experience. Folks, thanks so much for tuning in. Have a great night. Have a safe night. We'll see you tomorrow morning.